Welcome back to the program. I'm Zaremsky, listening to Lumi Financial Corner. With us once again, Michael Zaremsky, head of U.S. Private Banking, Bank Lumi USA, member Investments Committee for Lumi Investment Services. Michael, good to have you back. How are you?
Great to be back, Zev. Thank you very much. Hope all's well with you.
Thanksgiving is a day of where we say thank you. So in the financial markets, what should we be thankful for?
Well, I think first and foremost, when I look at the world right now, I think we should be most thankful for the normalization of the world. I think financial markets are starting to become a lot more normal. I think everything is starting to become a lot more normal. And I think that that's the number one thing that we should be thankful for. I think when we look at the three key dynamics of how we've been analyzing the marketplace, it's long been a discussion about COVID. It's been a discussion about fiscal policy, and it's been a discussion about monetary policy. And even though COVID certainly is around and there's still, certain parts of the world where it's flaring up, clearly at this point, the worst seems to be behind us. The concept of lockdowns is kind of eliminated. People are starting to, come back into the city more. There's a lot more people on the trains. There's a lot more people going back to the offices. Going to sporting events and just starting to live their lives again in a normal manner. And I think we should be really happy about that. And I think we should also be thankful that a lot of the emergency measures for stimulus from the fiscal policy and the monetary policy seem to have played themselves out. The big news recently in terms of monetary policy and the Fed is that we've embarked on the tapering. And again, for the people on the call, the government was basically going through a process of quantitative easing where they're essentially saying everybody is afraid to take risks, so we're going to buy risky assets and replace them with government assets. And at this point in time, it's clear that the appetite of people to take risky investments is pretty high, and the government is starting to, or the Fed is starting to slow the buying of those bonds and slow the buying of quantitative easing. And that's a really, really positive step. And that's something that will hopefully bring some normalcy back to the bond market. And then I think also in the terms of fiscal policy, I think that people's appetite for runaway government spending to help out, emergency situations has also ended. There still may be some juice left in the Build Back Better bill, but clearly there's going to be a long, arduous negotiation between the Senate and the House. And my expectation is if that does pass, it'll get passed down in a lot slimmer version than it currently is. And I think that these things are all very, very positive in that they bring us back to a situation of normalcy. And in a normal environment, we get away from a lot of the financial repression that we've seen. And again, financial repression is basically the government embarking on a policy that creates a situation where the savings rate is far, far less than the inflation rate. And basically savers get penalized. And hopefully as rates start to normalize, as the world starts to normalize, we'll get back to a situation that looks a whole lot more normal.
So let me ask this, Michael. The fact that the president has opened up the oil reserves to try to lower oil prices, does that have an effect on the markets as well, short-term and long-term?
Just a reminder that the views being expressed are my views, not necessarily the views of the bank or the broker-dealer. We've seen the oil prices spike, and oil prices become a very political issue because people pay for gas pretty much every day, and people see the flashing neon lights of what the gas price is. The release of the strategic petroleum reserves is generally symbolic. They're not going to be flooding the market with strategic reserve oil, but it's a symbolic sign to kind of help ease some of the constraints. And I think it just sends a message that we're going to be trying to do something about the problem. In general, I think that because we've seen so much demand, and again, we're seeing so much normalization, and people have money, and households are flush with cash, not a lot of debt. People are looking to do things, and there's the quote unquote inflation that we're seeing right now. Whether it's transitory, whether it's persistent, ultimately what we're seeing is very, very strong demand. We're seeing supply chains trying to come to grips with how much demand is out there. And that's the same for oil as it is for a lot of the other products that are out there. So I think that the release of the Strategic Petroleum Reserve, again, largely symbolic, but on the margin, it'll help. And hopefully what we'll also start to see is more pumping of oil, natural gas from Texas and from other parts of the country. And eventually, my guess is that we'll see oil prices decline a bit. They peaked at about 85. They're down. Last look was in the the high 70s, and we'll see where they go as the year moves on.
So basically speaking, as we start to celebrate Thanksgiving, we have a lot to be thankful for in the financial markets. I'm sure are rebounding, and the fact that we're coming back to normal is a very, very good sign for the future.
Yep, and again, I think we can be thankful for some very positive returns in the capital markets. And again, it looks like we're going to end up with another very, very strong year. And as we go into 2022, hopefully we'll continue the momentum and we'll continue to have a strong year as we go forward.
Michael Zaremsky, the head of U.S. Private Banking, Bank Leumi USA, member of the Investment Committee for Leumi Investment Services. Thank you for being here with us. Look forward to speaking with you again. And to you and your family, a happy Thanksgiving and a happy Hanukkah.
Thank you very much, Zev, and same to you and all your listeners. Thanks for having me, and happy Thanksgiving and happy Hanukkah.
And we're going to be right back.